This podcast is for informational purposes only and does not constitute investment, tax, or legal advice. Consult a qualified professional before making investment decisions. You should carefully listen to the full disclosure at the conclusion of this episode or review it thoroughly in the show notes.
Nobody wants to hear John Lennon give a PowerPoint on creativity and songwriting. They want to hear the story about how he and Yoko wrote Imagine. That's why here on Impact Investing Roadshow, we believe the best way to understand an investor's craftsmanship is to hear them dig deep into the story of a single investment. I'm your host and tour guide, Mark King. On this episode, you and I are going to hear from Christy Johnson, a founding partner at Fireroad Ventures based in Cincinnati. Fireroad is a pre-seed venture capital fund focused on AI-oriented products that address, business-critical problems for small and medium-sized business operators. Christy co-founded Fireroad in 2023. Before that, Christy spent several years at Ocean Programs, a Cincinnati-based accelerator for entrepreneurs who want to, quote, build great companies without losing their souls. She served as chief operating officer there. Before Ocean, Christy spent more than 4 years as executive director of advancement and digital products at Athletes in Action, a global nonprofit. There, she oversaw technology, marketing, and fundraising. On the education side, Christy holds a bachelor's in science in music, worship, and communications from Kuiper College and a master's degree in Christian formation and ministry from my alma mater, Wheaton College. Shout out to all the Wheaties out there. I asked Christy to begin by giving us the Fireroad origin story and a little bit about what led to launching the firm with this particular strategy in the venture capital space.
Fireroad launched in 2023, so we are still pretty new as a firm, and we are based here in Cincinnati with a founding team of operators across a couple of different categories, but convened around a couple of different trends or hypotheses, I think you could say, that are happening just in the world and in technology specifically. Our hypothesis is that in the age of AI, human-centered business becomes more valuable, not less valuable. And at the same time, the trends that people may have heard of as the silver tsunami, so the coming wave of business ownership transition, coupled with the technological revolution that AI is bringing, creates this opportunity that we think exists uniquely for people with perspectives in both sectors of the economy and of the market to bring the best of frontier technology and applied AI to local business. And so we have a couple of different capital strategies as a firm around those hypotheses. We have a services business that does AI services and some company creation or product prototyping and testing specifically for local small business. And then our ventures practice is an early stage equity investor, and we invest in early stage technology for local business, small business, the kinds of businesses on Main Street and every commercial corridor in America that will see ownership transition in the next 10 years. And then in terms of our why as a team, we each have our own version of the story, so I don't want to speak for my partners in terms of their why, but I came into this space after having operated an accelerator in the faith-driven ecosystem called Ocean Accelerator. And we had operated for 8 years at the time, working with high-tech entrepreneurs, helping them in a very kind of classic accelerator way, early product validation, early investing introductions and positioning and team formation, with a unique angle that for founders to build healthy, enduring businesses, it was essential for them also to be healthy, to have sustainable practices that connected them to meaningful relationships and to rhythms of rest, to their sense of purpose, and most often when we were working with founders who were people of faith, to their relationship with God. And we worked on programs that helped founders integrate all of those parts of their life. And we had a number of different capital partners, some of them small groups of local angels that formed very, very specific funds to back companies out of Ocean. We realized that aligned capital is a critical part of a founder journey, particularly if a founder wants to build their team and build their product and build their business in a way that might look maybe radical to some, or it might look a little sideways to folks who are used to the only set of incentives being financial. So I came to conviction that there was space in the market for another investor alongside the likes of many of my peers who are some very explicitly impact-oriented in their investment thesis and some who are very in industry and embody that presence in their relationships and work with founders more subversive.
It's awesome that your first step was to identify the types of founders that you wanted to serve in a values-aligned way. I'm assuming there was at the same time, or hand in glove with that, an investment thesis from kind of an economic standpoint, but then also an impact thesis in terms of kind of a change that you wanted to work with those founders to bring about. So would love to hear more about the investment thesis and the impact mandate.
Our team coalesced around this very broad statement of entrepreneurship can be a force for good in the world. And you don't need to look long or hard to find entrepreneurship as a force for selfishness and fraud and all of these toxic outcomes that have created great Hulu miniseries. So that's our rallying cry broadly across our partnership. So when we think about the convergence of AI and local business, oftentimes the headline reads, jobs are going away because of AI. And we believe there's a counter narrative that's available to us if we apply AI to these industries with large frontline workforces, with skilled labor that powers their work and enables them and improves not only their quality of employment, but also their quality of life. So when we talk about good jobs, that's the impact that we are pursuing broadly as a team.
You mentioned the importance of aligned capital and aligned values. Can you unpack that for me a little bit?
When we think about alignment as a capital business, there are a couple of directions that we want to look. The first is across our partnership. The second is with our investors. And then the third is with the operators and who we partner with. But for us as a team, we are aligned at a high level around that thesis that I mentioned earlier of the opportunity applying AI to local and small businesses. And when we think about that impact, we think about local business ownership preservation. We think about local job preservation. And we think about also the quality of those jobs, which is counter narrative to all the headlines around AI, that it's coming for our jobs, which is not untrue in every way, but is in a lot of industries where we are active is just not the case. And there are so many opportunities to bring this new technology and really help today and tomorrow's owners and operators of the businesses that run each and every one of our communities to help them operate their business with more profitability, to help them serve their customers more effectively, to help them employ their workers with more regularity and continue to build into the dignity of their employees. So that's what we're aligned with as a firm. And we lead with that when we fundraise, which helps us stay aligned to our investors. And on the venture side, we have 89 individual LPs. And that keeps us honest, I will say, to this thesis that we have, especially because many of them are actual owner-operators of small businesses themselves. And then the third layer of alignment is with the founders. On the venture side, where we invest, we want to understand their why, which may be different from our why, but we don't want it to be in conflict. We don't want to be butting heads. And I'll give you an example of when that was real tactically. We were looking at a company that was in the quick service restaurant, and through the nature of its technology and who they were selling to, it was going to be like, oh, we can upsell soda using AI because the soda companies are going to pay us because all they want is to sell more syrup to these drive-thrus. And we're like, okay, not really into that. As like that's what the business wins, is when everyone drinks more high fructose corn syrup. Like, I don't think so. There's probably a business there. I'm sure the founder is, as they say, crushing it, and that's fine. But it was one of those where like, I don't think we're aligned on the outcome we want to see from this business. And so we respectfully passed, and that was a good call because it became clear from our interactions after passing on the opportunity that it would have been very obvious very quickly in our work with this founder that we were not values aligned.
And there are moms and dads in drive-thrus all across America hoping, like you, that business fails.
Yep.
Tell me a little bit about the financing structure you use. I mean, I kind of envision traditional early stage equity, but give me a sense of what kind of flavor of early stage equity you guys execute.
So we right now are investing out of our first fund, Fireroad Ventures Fund 1. And in the world of early stage, we would call ourselves pre-seed investors. So we are mostly making investments on vehicles like safe notes or convertible notes. Every now and then we'll get a priced round where we're actually like buying stock right away. But we do that out of our Fund 1. It's a $5 million vehicle. And we're typically writing checks in the $100,000 to $200,000 range.
You mentioned you're based in Cincinnati. Tell me about sourcing locally, Cincinnati, Midwest, anywhere in the lower 48. What's a geographic footprint?
Out of the 24 investments we've made to date, we stretch from California to New York. And we have a couple of different sourcing strategies, but what I will tell you is our most effective source of new deals are founder referrals. And some of this comes from our portfolio, or oftentimes the ones that are the most exciting are when we say no to a founder and they still refer us to their friends, which indicates to me a level of a good rapport with founders. The other kind of founder network that we are a part of is just by nature of being operators ourselves. So the two partners I have on our Fireroad Investment Committee are serial entrepreneurs. So they know many founders building coast to coast, a variety of industries.
Now that we've got a good overview of your thesis around AI and Main Street businesses, let's dive down into the transaction that you did recently with Ando. Maybe start by just giving us the basic background on what they do and then how you got involved with them in the first place.
Ando is a platform that works in industries with large hourly W-2 employees. So these are sectors like food service, hospitality, transportation, where a lot of their employees are what would be known as chronically overemployed. They're shift-based, they're paid hourly, and they typically work 2 to 3 jobs to be able to make a living. And what Ando is doing is bringing a solution, recognizes that reality in these industries, works with employers who have W-2 employees, so it's not gig economy, and helps the employers have predictive scheduling that's like wildly accurate to the hour, but then also it puts the employees in the front seat of their scheduling across multiple employers. Because what happens in a lot of cases, because these jobs are just like everywhere, when an employee faces a conflict between jobs, or perhaps between one job and a household obligation, today is a viable solution to say, I'll just quit this job and get another one next week. Leaving the employer back on Indeed, trying to make all these hourly hires, which is they spend thousands of dollars per employee in these industries where there's over 150% turnover annually. And it doesn't have to be that way if employees can manage their schedule across different employers in a way that acknowledges, like, yes, not only do you have another job, you also have a life. So the employee obviously has a much better quality of life, right? They have predictable scheduling. They have input into their scheduling. They can go to their kids' like softball games, or say, you know what, we'll work first shift so that I can be home at 3, and then a couple days a week I need to go and pick up like the closing shift from 7 to 8, but I want those 3 hours at home with my kids, and they can make that happen in this platform. So that's like the big idea. I would say that's the medium idea. The big idea is that by having access to this cloud workforce that Ando is building for, they will have the biggest graph on labor in the United States. There are 82 million hourly workers in the US alone. And by having visibility into these workers and their schedules and their preferences, and also the demand on the employers, they'll have a sense of basically supply and demand of labor on an hourly basis, in theory, across the country, or perhaps across a metro and an industry to start. So when we looked at that, we actually got that from our network, an email kind of list of founders who share deals with each other. And it piqued our interest right away. Huge frontline workforce so we were like, oh, high impact opportunity here. And we took a call with Paul. Paul Wellens is the CEO. And I wrote down our timeline here. Our first call with Paul was on April 7. And the way we start our process is one of our partners will typically take a 30-minute introductory call just to get a sense of the founder, get a sense of their journey in the industry, and kind of their sense of the problems that they're trying to solve, and just where things are at generally, and if it's a true like venture scale opportunity. And so that happened on April 7. My partner, Tim, was the first person who talked to Paul. And from there, that kicked off. And it was really about 3 weeks of diligence for us when we were digging into Ando. And right away, what was neat was that there was very obvious founder domain fit. Paul had scaled and been an executive at brands like KFC and Einstein Bagel. And so like these employers where he was dealing with the problems that the workforce faced and that ops and HR had to deal with because of this like mismatch of labor supply and demand. So very obvious founder market fit right away. And one thing that stood out to us was that as soon as he talked to us, he sent us like, I think it's like a 40-page white paper that they had done like first party research on this, and really, I think spoke to the gravitas that the team is bringing to this space and the seriousness with which they are tackling it versus just coming in and being like, and I love lean methodology, but it wasn't like we built a prototype and a landing page and got some people on a wait list. It was like, no, we researched this deeply and professionally and have the lived experience to back that up. So that's how we started.
Tell me about the 3-week process then. What goes into the diligence?
So from a first partner call, which is usually with the CEO, we then have a second partner take a similar call if that first partner is green light. And this is because our investment committee is unanimous. There's only 3 of us. And before we dig into a lot of diligence or start looking at data rooms and financial models and tech stacks and stuff like that, we want the majority of our investment committee to be at least aligned on interest. And also we do gut checks on just like chemistry and character between our team and the founders, because it's a really long relationship. And if one of us gets off the call and says, I wouldn't be sad if I never talk to that person again, it's probably a no. So we do 2 partner calls, and then we'll take something into diligence, which usually is not, we don't do anything like wildly unique. We're researching the market. We talked to 3 of our LPs who operate businesses with these types of workforces and get their perspective on the problem space. We don't typically have our LPs like get into a product that we're thinking about investing in, just because we invest so early and it's not going to be good. It's not supposed to be good. But tell us how you solve this problem today, so we can validate with our LPs that way. So that's part of what went into those 3 weeks. I read the white paper, which is surprising to me how few investors actually read the materials founders send them. So we read that. We had a call with one of their angel investors, who also was serving as a fractional CTO. And then from there, we went just into memo writing. And that's usually a couple of emails back and forth with the founder. If they have a data room, I'm looking at financial models. That the call with the technical advisor, the angel, was really important for us because it's a substantial product that will be demanded if this works out. So we wanted to make sure that there's good technical leadership and vision, which was part of it. So then from there, we had a final call before we take an investment to committee. And that's the 3 of us on the investment committee. So me, my partners, Tim and Rye. And then we also invite basically anyone who's on the cap table of this team. Usually it's any co-founders, and then if they have like key leaders in go-to-market or a CTO who might not be a founder in title but is building the product, we do that last call with a pretty large group. And what was fun about this one was the technical angel who was serving as CTO at the time got on the call. Our partner Rye got on the call, and they looked at each other and they were like, you. And they had known each other just like maybe even a decade ago in kind of the developer world and had no idea that they were the ones on the other side of this. And that ended up being a positive signal, which could have been negative signal, but it was a pretty positive signal and validated kind of our confidence in the ability to build a good product. So that was on the 25th. So we went from April 7, first call, to a final investment committee meeting on April 25, which is pretty quick for us. I'll tell you that.
I was going to say, sounds quick, but not for pre-seed, not crazy. There's limited ability to diligence things.
Yep. And so those 3 weeks included at least 5 conversations between our team and their team. So we're spending...
In person? Did you in person or all Zoom?
No, all Zoom.
Or where's the team located?
So the team is distributed. Okay. They have a presence in San Francisco, in New Orleans, and in Atlanta.
Interesting.
Their initial design partners on the commercial side were New Orleans based. So that's where they're spending a lot of time.
Now, the thing with pre-seed is there's not a whole lot other than maybe the founder's background that's rock solid at that stage. When you think about all the different things, what was top of the list in terms of concerns? Did you guys identify key risk?
I think you said it well. Everything is a risk at pre-seed. What we were in the middle of learning when we did this deal was actually the capital risk of pre-seed. Specifically being comfortable going very early and also being small checks. So we had learned the hard way that there are some of these rounds that come together and it's, in quotes, $1 million, but it's raised over the course of a year, and it's like money in, money out. And that is an uncomfortable place to be as a fiduciary of other people's money. So we had actually started making our investments and said, we will close when the round is together. Not that we don't want to be like last check-in, but we can't be the only check-in. So that for us, with a lot of these very early stage things, is actually the biggest risk, is just like this first round of capital and getting that together in a timely way so that the founder can get out there and build the product, build the team, take it to market, and then we'll learn what those risks are down the road. So we actually made our investment decision at the beginning of May, on May 6th, and said we've allocated this amount of money. We hang on to this money for 90 days and we're ready to go when it was probably something like $750K is in the bank. Ideally, you'd love to see a founder with 18, 24 months of runway with this capital environment, and just acknowledging like the world we live in and the types of founders we actually want to invest in is like, you just need to have some runway. It can't be like you're going to take our money and then you're going to spend it and you're going to be out of money in 2 months. That was very top of mind when we allocated to Ando. And what happened over the course of kind of the following 3 or 4 weeks really gave us even more conviction on the important parts of the business. And I'll give you a couple of highlights. I was in San Francisco for another trip and was able to meet Paul, which was great. So ticked that box of we've sat down across the table with each other. And then he is a great communicator. And so through regular updates, he brought on another engineer. They shipped a version of the product and they closed a large multi-location commercial partner. So those are like the 3 things that we want to see in a founder, right? Can you build a team? Can you ship product with your team? And can your team sell the thing? And so over the course of really 3 or 4 weeks after that initial allocation, and because he was communicating, we could see those parts of the business not being fully de-risked because it's a pre-seed deal, but could see the competency and the skill and the progress of the team. And after one of his updates with that kind of multi-location partner close, we were like, all right, let's go. Let's do this. So then we end closing on like June, first week of June.
You mentioned earlier the commitment to founder well-being. During the diligence process, do you start identifying areas where you think you can help with that particular aspect of founder development or founder support?
What we do is when we decide to take something into diligence, so after that initial call, we share with founders a couple of key documents about us. And we say, hey, like this is a mutual relationship. We want you to know that if we continue to work with each other and partner with each other, like here's who we are. And we send them our values. We send them our operating principles. We send them our diligence process so they know what to expect. And we send them our framework on founder well-being. And that yields some great conversations and also differentiates us, I would say, in a pretty stark way. Not even with the contents of those materials, but to say, we're going to set the power dynamics aside here and say we're mutually deciding if we want to do business with each other for a decade. So let's do that in a mutual way. And that has been really led to some really important conversations with founders where they feel like, okay, now they know what they're getting with us on their cap table. And they can identify if we're aligned or not. And there's been some cases where it's like just like in one ear out the other. it doesn't resonate with founders at all, and it's okay, that's fine. And then others will be like, oh my gosh, like this line from your values is like this line from our kind of like memo or our deck. And it's cool. Yeah, let's go. Or at least let's keep going and see if we can go further. That's how we work it into the process.
Shifting from the decision process, because it sounds like I don't want to skip over the investment committee, but with the three of you being deeply involved in the process, I suspect the quote committee meeting or decision is a bit of a formality at that point.
I work really hard to make it that. And that being said, over the life of our fund, so we've been investing for about 2.5 years. We've done 24 investments. We have number 25 allocated. It's either 3 or 4 times we have taken something all the way to committee and said no. So it happens, but it's not in the same way that a lot of firms where it's like every partner's bringing a deal and you're all pitching each other, but you can only do one deal, and it's like lobbying and persuasion. Right. And it's like we try really hard to get to consensus on our investment committee ahead of that.
Yeah. Give me a little postmortem on that. Is there a lesson learned from those 3 or 4?
I think we are still figuring out how deferential we want to be to each other. For example, if there's one of us is saying, we got to do this deal, we're pounding the table. The others of us are like, if it's gotten this far in process, there's not like an absolute like deal killer in there. It's more just greater enthusiasm on the part of one partner than the others. We have gotten sharper on what we look for in a founding team. I would say when we started, we were open to some gaps in a founding team that today we wouldn't take it to committee, because we took it to committee and it killed a deal. And it's, oh, is this a thing that kills deals for us? Interesting. Okay. We won't do that anymore. And I don't think it's completely avoidable to get in those situations. And the best thing that I try to do is be open with founders when we do move to, as I'm wrapping up a memo, and say, this is our process. This is where we're at. This is, just so you know, a possibility and has happened. That's been tough in the moment, but falling back on just having open communication, and hopefully that is respectable and respectful of founders along the way.
Right. Maybe one last question about the decision process. The majority of the decision is a people decision. It's a concept, market, kind of thesis decisions, certainly, but a huge piece of it at this stage is the people decision. How much kind of qualitative work do you do that in terms of reference checking, off-list checking, that kind of stuff?
There are a couple of ways we try to get at that. When we engage an LP in a diligence process, if they interface with a founder, what we hope they help us understand is that this founder understands my market. They're using the right words. They are referencing the right competitors or problems or things like that, which is not necessarily a character reference, but is something that an LP in that industry would know much more natively than our team in most cases. We use a platform called Wendell, which is a founder screening tool that's built on a couple of different psychographic markers and helps us identify things like grit, their decision-making, communication style, their energy level, and like how they relate to information and action and things like that. And that's developed by another firm here in the Cincinnati area, really fine-tuned for early-stage venture building. And then where we know other investors or competitors or customers in the market, we do go ahead and give them a call. Like I mentioned for Ando, we talked to the angel investor who was already on the cap table, who was operating with them from a tech perspective for a couple of months, and that's helpful. We also will, before we allocate, check in with other VCs we know who have similar theses or who may have talked to the founder, maybe diligencing the same deal at the same time, and get a sense of kind of their read on the team, which is helpful. In more than one case, one of our portfolio companies had a lead investor who was on the board. Very unusual for a pre-seed company to have a board. And so I talked to the board member, and he said about the founder, I've known him for about 2 years, and he kept on telling us what he was going to do, and then he kept on doing it. So we decided to invest. And I thought, what a great reference, you know? And so wherever those connections are available to us, we do go ahead and try to initiate that feedback.
Tell me about the closing process and give me a sense of kind of the nuts and bolts of how you actually close one of these to keep it from becoming a major legal project.
Yeah, I would say it varies deal by deal. And in most cases, we are executing a standard safe note that we use like very broadly across our portfolio. And we also have like a template side letter that includes like information rights, pro rata rights, things like that aren't in a standard YC safe. There's also like a standard Carta has a standard safe, and it's like we're comfortable with either. And sometimes the founder has counsel that manages the closing. And in that case, we're not leading rounds, so we're not setting closing dates. We're not dictating pace or anything really beyond pretty standard terms for this stage. So sometimes the founder's counsel will manage the closing process. Other times it's the founder. Once the round's together, they'll put everyone on a thread and be like, all right, we're executing on this day. And they'll distribute all the safes out to everyone, and then you'll wire within like 24 hours. Sometimes when we're doing something very early alone, I'll just initiate the paperwork, and it's those same templates that we've used probably a dozen times by now, which it's like our counsel worked on them the first time, and they're very transferable.
How did it go with the Ando specifically? It sounded like there were, first of all, it sounds like maybe a little more sophisticated than your typical founder.
Yeah. His counsel managed it.
When did you actually close and fund?
We closed that the first week of June.
And they off to the races? You have the closing dinner and everything is wonderfully, magically awesome? Or how goes it?
Yeah, so we are in touch. A handful of our portfolio companies, we talk mostly quarterly. He does a pretty faithful update. And post-investment, what that's looked like for them. So they were in early kind of pilots with a handful of commercial partners. So they spent the summer and the early fall really fine-tuning their predictive model, this predictive scheduling, and got it to a place where they do feel very confident in the platform's ability to accurately predict workforce demand. And had done that through a couple of key partners, which each were multi-location brands. So like a 15-location quick service salad brand. And then they added a new city in Denver over the early fall. I think that was September when that happened. And along the way, we have been sending we do like an outbound founder check-in on some of that founder wellness work. Paul's been participating in that with the rest of our portfolio founders. And then they rebranded kind of once they knew it was going to work. The original name was Methodic. So once they were ready to scale commercially, did some professional branding work to Ando and are working on raising a seed round this quarter, in which case, like when our portfolio is fundraising, we spend a decent amount of time connecting them with investors in our network who are potentially interested.
Tell me a little more about the founder wellness survey, kind of what's covered and how people reacted to it, and what's kind of been the experience with that.
So it's about every 8 weeks, we send a quick SMS check-in to founders that pulses them on 6 dimensions of life. And these dimensions are based on a longitudinal study out of Harvard Center for Qualitative Social Science called it's the seminal paper is called On the Promotion of Human Flourishing. And for any kind of impact oriented, it's pretty well known. So when we thought about how can we be founder friendly investors, and what does it mean for founders to be well in other areas of their life? As a former nonprofit operator, the question I always come back to is how will you know you're having the impact that you want to have? And we need to measure it. And in my mind, I'm why would I make up a way to measure this? Let's just use something that's accepted social science on what are the dimensions of a flourishing life. So those areas are financial and material stability, physical and mental health, close social relationships, meaning and purpose, character and virtue, and life satisfaction and happiness. So within each of those 6 dimensions, we have a bank of probably 5 or 6 questions. The founders get served a random question for each dimension. And then so we've been doing this for almost 2 years now. So I have a lot of, in the world of research, it's not that much data, but it's a significant amount of data on our portfolio. So I can see trends on how they're doing and see we had a season last summer where it was financial material stability nosedived. And sure enough, people were short on runway. It can be a stressful season for households with increased childcare and child activity kind of costs and stuff like that. And for a lot of those founders, it was they're kind of 6 months in where it starts to get real of, oh, I still haven't taken a paycheck. And that starts to be a louder pressure. So that's what we do. And then based on what we see each month, just try to offer really lightweight, I will say, responses to what we see. Sometimes it's, oh, here's a practice that one of us or somebody we know has found to meaningfully make a difference in this area of life. Here's a partner resource. Here's a service provider that's willing to offer some in-kind services, things like that. And it's really I cannot stress how lightweight and non-institutionalized it is. But it's our effort. And I've heard from more than one founder, and my husband, who's in ministry, was oh, that's actually proven to be true, is simply the act of somebody checking in has a small effect in the positive on things like mental health and a sense of relational connection. So just that act, we hope, gives founders a moment for reflection on other areas of their life and gives them a sense of care from one of their investors. The other thing I'll say about that is, so we do that, the data, and then it closes with of course, an NPS score, and then an open-ended, how can we support you? Or if you could activate the Fireroad Network towards one thing, what would it be? And when I respond to founders after that, it's, hey, I saw you are thinking about hiring a growth marketer or whatever. They're oh, I didn't think you read that. Who do you think is out here? It's just me. We're here. We're doing what we said we were going to do. And it continues to catch our founders off guard of, oh, I didn't think you actually followed up on the thing that you said mattered to you.
I was going to say it's a sad commentary on a number of things.
Oh, absolutely. I continue to just be shocked and dismayed at how low the bar is for behavior on the part of investors.
As you're looking at Ando raising a seed round, how much kind of fresh analysis do you do? How do you think about those follow-ons as a process?
We, to be honest, don't spend a lot of time thinking about follow-on because our fund is so small. So we're investing, like I mentioned, out of a $5 million fund. So we have less than 10% of our investable capital reserved for follow-on. which we have tended to do with very early stuff, where even our follow-on check is priced at a $5 million valuation cap. So it's less expensive equity. So that's a little bit of a cop-out. And that's just because by nature of being a small fund and being so early, like I very strongly believe in a diversified portfolio. And if we were in fund 2, God willing, we'll be investing out of a larger fund. So we will be able to do some follow-on capital. And it really goes back to those 3 things, right? Are we seeing momentum in building a team, in shipping product, and in selling the product? And so Ando is raising a pretty large seed. I think it will be in the $3 to $4 million range, which is a significant step up from the $1 million pre-seed that we participated in. And that is an indicator of what I think is just the market size and some of the location. So being a Silicon Valley based startup, there is a different pricing structure, I would say, than those of us who are centered more off the coasts. And so I think that speaks a little bit to the size of the round. And then I think like some of the investments we make, they're very vertical, they're very niche. And as far as we can tell, no one else is working on it. And so it's the founders can not necessarily take their time, but it's less competitive to get in market and win the market. And then there are opportunities, and we think of Ando as one of these, where it is potentially a land grab, where you do need to get out there and really saturate the market with your brand and get large commercial agreements going, build the team with velocity that requires a substantial amount of capital.
Have you thought about potential exits for them? Are there logical acquirers, or does it feel a little bit more like maybe a PE buyout if there's that many people playing around the space?
It's a strong PE buyout candidate given the sectors that it serves. And some PE shops have like multiple fast food brands. That's a potential path. I think there's a potential path to a PEO acquisition of another tech forward PEO. Or I don't say this about many of our investments, like it could have IPO potential if it goes where we think the opportunity lies, that big.
And speaking of capital raising, you mentioned Fund 2. What's timing or thoughts or plans for Fund 2 for Fireroad?
We are working on Fund 2 right now and are still designing our portfolio strategy, but we have more conviction than ever in our thesis and in the opportunities around our thesis, and also in the quality of founders who are out there building right now is just like inspiring. So we will be in market with Fund 2 in 2026 for accredited investor asterisks.
Yeah, all the normal disclaimers.
Yep. But that's our plan, and that'll be a 3-year gap, and we'll be wrapping up our investing out of Fund 1 in the first half of 2026. So we're trying to orchestrate a nice crossfade where we're never not investing.
And if investors or founders want to reach out to you, what's the best way to get a hold of you, Christy?
If, in the words of Kim Possible, you might not appreciate this reference. Call me, beat me if you want to reach me. My email is just my first name at fireroad.io or LinkedIn. We also have an intake form on our website, and I am personally the one who looks at all those. We're pretty accessible.
Perfect. And it is fireroad.io. Hats off for the unique URL. So,
yep. We also have the redirect to fireroad.vc.
Ah, there you go. Domains, dime a dozen. They will sell you lots of them if you give them the chance.
Indeed.
Christy, thank you so much for taking the time. It's been fun to learn about Fireroad and take a little bit of a deep dive on Ando. Good luck to the Ando team and good luck to you guys.
Thanks, Mark.
I hope you've enjoyed hearing the story of Fireroad and Ando as much as I have. Thanks again so much to Christy for taking time out of her busy schedule to join us and share their story. One particular point of clarification I realized is Christy's email is actually Christy with a C and a Y, CHRISTY at fireroad.io. You can also get more information and all the show notes, etc. at impactinvestingroadshow.com/fireroad. There you'll have her email correctly spelled, as well as links to other things that we mentioned in this episode. Lastly, if you could do me a personal favor, I would really appreciate it. If you've enjoyed the show, could you forward this episode to some friends and colleagues? They will think you're an awesome friend, and you will have my eternal gratitude. Would appreciate that if you could share this with folks that might be interested. So until next time, I'm your host, Mark King, reminding you that if you want to move the impact needle, you got to step on the gas.
This podcast and related content are for informational purposes only and do not constitute financial, investment, tax, or legal advice. Always consult a qualified professional before making any investment decisions. All opinions expressed by Mark and podcast guests are solely their own and do not reflect the opinion of the firms they represent. Facts are believed to be accurate at the time of publishing only. No effort has been made to verify facts presented by guests, and no updates have been made since the date published. This podcast is not and should not be construed in any way as a solicitation for investment or an offering of securities. Mark and guests may own positions in securities discussed. Impact Investing Roadshow, Mandorla LLC, guests and Mark King disclaim any and all liability for actions taken as a result of listening to or reading this educational content.